So, good afternoon, everyone. Welcome to today's webinar, hosted by James Cooper Creston in partnership with Trace. I'm Fiona Hawkins. I'm a partner here at James Cooper Creston, and I'm our sustainability lead. We are delighted to have you with us today as we explore the increasingly important topic of carbon accounting and its relevance to businesses of all sizes. As sustainability moves from a nice to have to something that's much more of a business necessity, understanding and managing your carbon footprint is becoming increasingly essential, not just for compliance, but for competitiveness, credibility, risk management, long-term resilience. So in today's session, we are hoping to demystify carbon accounting, show how it applies to SMEs, and highlight how we can help you in getting started. So I'm thrilled to be joined by Beau Bartlett from Trace, our carbon accounting partners, and Beau is going to guide us through the tools and the frameworks that make carbon accounting accessible and actionable, and he's going to show us some real-world examples. Whether you're just beginning your sustainability journey or whether you're looking to enhance what you're already doing, we hope you're going to leave today with some fresh insights and some really clear next steps. So thank you again for joining us. Just if you've got any questions, just really quickly, if you've got any questions through the course of the webinar, please post them in the Q&A and we'll come to them at the end. And I think that's over to you then, please, Beau.
Thanks very much, Fiona, and good to speak to you all today. As Fiona mentioned, my name is Beau. I'm from a company called Trace. We are carbon management specialists. We partner with accountancy firms, equipping them with software that helps with their delivery of carbon accounting services. And Fiona kindly invited us to speak to you all today to talk about carbon accounting at a high level, to give a bit of a background as to what it is, what is carbon data, but also where are requests for carbon data increasingly coming from, and what is the relevance for SMEs as well. So very, very high level agenda today. First of all, I'm going to give a quick overview of what is carbon, what is net zero, what do we mean by these terms. We'll then go into some information on what is driving requests for carbon data, and then really hone in on why businesses need to be prepared for this, why they need to have robust carbon data in place. So kicking off at a very high level, I appreciate there'll be people on the call with different levels of experience in sustainability and carbon. So for some of you, this might be very familiar. For some of you, it might be very new, but we'll start off, as I said, at a very high level here. So the increase of in greenhouse gases, of which carbon dioxide is the most prevalent, has resulted to this point in an average global temperature rise of over 1.2 degrees since the Industrial Revolution. Now, what you can see on the screen here, some of you might be familiar with this image, is known as the warming stripes. So each stripe represents the average temperature for a single year from 1961 onwards. And obviously, the deeper the red, the hotter the year. So 1.2 might not sound like much, but already, of course, we're seeing a huge increase in extreme weather events around the world. Now, companies obviously have a big part to play in all of this as emitters of greenhouse gases. And the gateway to understanding the environmental impact of an organization is carbon. It's currently the best proxy that we have for measuring our impact on the planet. And this is why you often see carbon as a real focal point of sustainability data and reporting requirements. It's often the main thing that comes up and the first thing that comes up, which is why we focus on it so heavily. Now, to stay at this high level, scientists believe that we need to limit the warming to 1.5 degrees above pre-industrial levels to reduce the odds of the most dangerous effects of climate change. So to achieve this, we've got to reach net zero emissions as soon as possible. And I'll come on to that term again in just a moment. Around 10 years ago now, in 2015, the Paris Agreement was an international agreement that states and non-state actors will commit to net zero emissions by 2050 in order to prevent those really catastrophic global warming effects. And the reality is that actually this probably needs to happen a fair bit sooner than 2050 on the current trajectory. So this slide shows the names of all the different types of legislation across the world when it comes to climate reporting that have been implemented since the Paris Agreement in 2015. I'm not going to run through all of these, but what I think this does show clearly is that legislation is being rolled out at pace globally. A few interesting call outs. So we had, for instance, New Zealand as one of the leading countries to roll out mandatory reporting. We have Switzerland, which is currently the only country where net zero is actually a legal requirement for business. So the act there in Switzerland requires all companies to be net zero by 2050. Some of you might be familiar with the Corporate Sustainability Reporting Directive, or CSRD. That's the EU legislation requiring large companies to publish frequent reports on their environmental and social impact activities. And we've got lots of companies starting to report under these different pieces of legislation currently. And most recently, we have got Australia, which actually rolled out mandatory climate reporting earlier this year. I'll actually come back to that in just a moment because it gives us a good indication of where the UK is going. Now, I think there's probably one big exception to this, which some of you may have at the top of your minds based on recent news, which is the US. Now, it's fair to say that the administration in the US has effectively stopped the SEC's climate disclosure rules. They put a pause on that. And you can see similar anti-climate action sentiments in places all over the world, including in the UK. And you might think that this would be having a big impact on reverting or pausing climate reporting. But actually, that's not the case. Companies aren't changing course from tracking these risks. There was actually an MIT report on sustainability in supply chains that was released just a couple of weeks ago. And it showed that over the past year, 85% of companies have either maintained or increased their sustainability targets, with the remainder of those companies that have reduced those being primarily based in the US. So you can see that there's still this traction around climate reporting. In terms of the UK, we've got the Climate Change Act, which is committing the UK by law to reaching net zero by 2050, and it's set legally binding carbon budgets. What's really important here is that we're committed by law. So this means the government is now rolling out frameworks, policy, and different guidelines to help us get there. So now we'll go into how does a government or a company actually get to net zero. So we've got setting a target of net zero being one thing, but actually net zero, achieving that is going to be another thing. So I'm just going to go through a little bit of the terminology about what we really mean by net zero, because there's still some confusion around this space. So what is net zero? Net zero is defined as reducing emissions as far as possible, following science-based pathways, with any residual emissions being fully compensated by permanent carbon removal. And the general consensus is that this needs to be a minimum of 90% reduction in emissions from your baseline year. We do have things like offsets, so tree planting initiatives and lots of other offset projects out there that can play a key role in the short and medium term to protect carbon that's stored in vulnerable ecosystems, accelerate the transition to a low carbon society, and so on. These offsets, of course, been rolled out quite widely across the world, but the main focus absolutely has to be on emissions reduction, that 90% reduction in emissions from the baseline year. So in terms of the steps that a company needs to take, firstly, it's all about measuring your baseline. So what are your emissions as an organization today? That's a really key starting point. Number two is then around setting targets, so your ambition. That then, of course, is holding you to account for delivery. Number 3, we've got committing to and sharing those targets, ideally publicly, but at least within the management team of your organization or with your decision makers. And then it's all about implementation. So planning what initiatives you're going to implement to actually reduce emissions, reporting on those on an annual basis, and then mitigating what is residual. So this really is a cycle that has to be repeated each year until we've reached net zero, which may well take some time. And that's why you often see as well, companies, they'll do their reporting on an annual basis when it comes to carbon. So a tiny bit more terminology I'm going to throw at you here. Many of you will be familiar with this, all around emissions categorization. So we mentioned that the path to net zero starts with knowing what and how to reduce. And this is carbon accounting. And as Fiona will point out later, this is something that James Cooper Creston are really well placed to help you with. So we have something called the Greenhouse Gas Protocol, which is essentially the best practice standard for carbon accounting. And that helps to classify organizational emissions within 3 scopes. So these are divided the same in any company or organization. You've got scope 1 emissions that are direct emissions from the activities directly under your control. So this is things like you've got fuel combustion on site, such as gas boilers and fleet vehicles. Now, these tend not to be a big part of an organization's emissions. In some industries, they can be slightly larger, but for most companies, these can be relatively small or even zero if you're a services-based company. Then we've got scope 2 emissions. These are indirect emissions from electricity purchased and used by your organization. So emissions are, of course, created during the production of that energy, eventually used by your organization, which is why they're known as indirect emissions. And then finally, we've got scope 3, which is actually going to be the main focus of what we're talking about over the rest of the webinar today. These are all other indirect emissions from activities of your organization occurring from sources that you don't own or control. So these are pretty much always the greatest share of the carbon footprint of an organization. They cover things like business travel, working from home emissions, procurement or supplier spend, waste as well. So that's a quick background of the terminology. I want to spend the rest of the time here looking at how this is actually implemented and what this means for businesses. So some really interesting stats here. This came out from a net zero census nearly a year ago now, where it showed that 46% of companies in the UK have already had a request for carbon data. And when you look at the SME number, that goes to about 37%. And as I said, that data is from nearly a year ago now. We actually expect that number to be significantly higher. And what that points to is that companies are frequently being asked for carbon data, whether that's either hard requests, as in companies have to have this in order to do business with certain companies, or lighter requests. And I'll come on to that in just a moment. But this diagram really helps to visualize where some of this pressure is coming from for carbon data. What is the root cause of these requests? So right there at the top is we've got the fact that the UK has committed legally to reach net zero. They've got a legally binding target to get there. And that means that in order for the UK to get there, they need to put pressure on the whole country to move forwards. So UK government releases regulation and policy to help us do that. Now, that regulation hits the corporates. It's generally to date has been only affecting the biggest companies in the UK. And I'll caveat that with we've got new legislation coming into play next year called UK SRS, or UK Sustainability Reporting Standards. This is the latest form of climate legislation in the UK. It's actually just come out of consultation. And if we look at other markets like Australia, like we're going to do in just a moment, you can sort of see what the rollout plan is going to be there. So coming on to that example, speaking of Australia, this is a really good example of the legislation side of things that's already been rolled out. and that the UK is likely to follow suit with. So from January this year, you can see that any company that meets 2 of those criteria there has had to start their mandatory climate reporting. So companies with over 500 employees, over $1 billion, that's Australian dollars in consolidated assets, or over 500 million in revenues. And for most of you on the call, I appreciate you're probably thinking, right, that's not my business. We're not as large as that. There might be some organizations on the call that are as large as that. But I'll come on to why this still affects smaller businesses in just a moment. But you can see there that the next phase is 2026. It goes down to 250 employees and so on. And then from 2027, you're looking at companies with 100 employees, 25 million in assets, and 50 million in Aussie dollar revenues. So quickly you can see how the scope of these disclosure standards are going to impact more and more companies over the next few years. And we're expecting, as I said, with the UK legislation being introduced next year, to see a very, very similar rollout plan, albeit a slightly delayed one. Obviously, that's already kicked off earlier this year in Australia. Now, I'm going to park regulation there for the time being and actually focus on something which is far more pressing for most businesses, which is supply chain pressure. This is the thing that's affecting more and more SME businesses across the UK. So there's 2 key drivers of carbon reporting via supply chain pressure. We've got one on the left, which is public policy, as it is set by the government to help them hit their target. And then the second is corporate targets, which are a requirement of the legislation of the type we just talked about. I'm going to dig into each of these so we can see exactly what SMEs across the UK need to report on in order to remain relevant as a business. So let's first dig into public policy. So the government needs to set policy in order to drive its own supply chain to net zero. So all of that comes under a policy procurement note called PPN 0621. I imagine some of you on the call will have come across this. And this basically is allowing the government to say how it's going to account for carbon within its supply chain. If you look at the best example of this in implementation to date, it's the NHS. Now, the NHS has its own target to hit of net zero. They've got a net zero target by 2045 for its emissions in its supply chain. So that's its partners and suppliers. So in order to get there, they need to help their suppliers decarbonize or work with suppliers that are focused on this. And this diagram just very quickly shows you the roadmap that the NHS has for the transition to a sustainable supply chain. And the biggest factor there being, as of April last year, so a year and a half ago, the NHS required all new contracts to have a carbon reduction plan in place. So any business that was bidding for a contract with the NHS, that's nearly 80,000 UK businesses, has to have a carbon reduction plan in place. And to give you a quick insight as to what is contained within this carbon reduction plan document, and by the way, it's not just the NHS where this is rolled out in public sector, it's increasingly hitting other public sector organisations as well. But there's 7 key requirements. So firstly, you've got that commitment to reach net zero. You've got the baseline. You've got the most recent emissions year being displayed in CO2 equivalents. And then you've got actually number 5, so establishing what those reduction activities are. 6 is the signature from your board to show endorsement and seriousness of the organisation's commitment. And 7 is for public disclosure. So this must be easily locatable on your website. We don't have time to go into each of these today, but this is just to really reiterate how policy and legislation and things like that translate into reporting requirements and what those look like. To summarize this is a quote from a sustainability leader in the NHS. And the general summary here is that having a carbon reduction plan is a condition of doing business now with the NHS. And as I said, that sort of same condition is now starting to take root in other public sector organizations. So I'm going to take a slight move laterally now and look at what is driving demand for carbon data within corporate targets. So this is still very much supply chain pressure, but it's the public sector rather than the policy that we looked at in the public sector. So this is driven more from that regulation side of things that we spoke about. So regulation, like that roadmap that we showed for Australia, it's requiring corporates to report on their supply chain emissions, which of course includes the contracts that they have with thousands of SMEs. And this means that it's very common in tenders and RFPs and things like that to ask suppliers for their emissions. Now, that can either be in the form of a strict requirement, like you see, for instance, with that NHS requirement, as in you have to have a carbon reduction plan to bid for this piece of work, or more frequently at the moment, you'll see it being a weighting as part of a tender. It might have a 10% weighting, for instance, you know, the efforts that you're putting into decarbonisation and the robustness of your carbon data. And why this is useful is this carbon data is used to help the large corporate report in a more granular way. And it's helping them to decide which suppliers they're going to work with moving forward and hopefully then start to decarbonize their supply chain emissions. So I mentioned the key factor here is that the regulatory reporting, it includes scope 3 emissions, which means that any companies within their supply chain are affected by implication rather than the regulation directly. So for most companies, as I mentioned, the scope 3 emissions account for a huge total of their overall emissions. It's usually over 80 or 85%. So it's absolutely where the focus area is. If you think about companies to date, they focused a lot traditionally on scope 1 and scope 2 emissions, things like their electricity usage, which is absolutely the right place to start. That's more of the low-hanging fruit. But it's scope 3 emissions, that big chunk of their emissions where they're now increasingly focusing. So we've got companies like Amazon, ITV, AstraZeneca, all releasing information that suppliers will be required to report and reduce emissions in order to do business with them. And to give a super quick example of this, here we've got Amazon. So they've got a supply chain standards disclosure. And the key bit here, you can see it outlined in that red box on the screen. It allows them to ask any supplier at any time for credible greenhouse gas targets and to share their progress by reporting and providing their emissions data. Now, when they ask, and what we've seen from lots of large corporates is they can put any timeline on that. They're often not likely to give extended periods to provide that data. So when this ask for carbon data comes in, it's often very urgent, which is why it's important to be prepared for it. And there's hundreds of examples out there of corporate supply chain pressure. Amazon was just one of them. So if you have a think about your business today and where some of your clients are, if some of them are large corporates, if any of your clients sit in that kind of B2B landscape, obviously with these large organizations in your client list, then this is something certainly to start to get prepared for if you haven't started to do so already. So that's the supply chain side of things. We've looked at the regulation side of things as well, but there are, of course, a number of other benefits to focus on carbon data, on carbon management, and getting a really robust decarbonisation plan in place. So firstly, no surprise that if you are making efforts to reduce your energy usage, you're going to reduce costs associated with that. So we see benefits there for cost savings, but also with green finance. So with preferential loans and things like that from large financial institutions, that's increasingly becoming the norm. A big factor here is that customers care. So there was a study a couple of years ago. It showed that companies that effectively communicate their sustainability efforts grew 40% quicker than their peers over a 5-year period. So really, really powerful given that customers really want to buy from businesses that are doing the right thing. An often under-mentioned factor is that employees care. So 65% of staff expect their employer to take action on climate change. So in this recruitment and retention market, it's really, really important there from an employee perspective. And then finally, we've already discussed this in a fair bit of detail, but perhaps one of the most crucial there is winning and retaining your contracts with large corporates. To summarize here and just to wrap up before I hand back over to Fiona, SMEs account for over half of global emissions. So there's a real need for us all to decarbonize along with the large organizations on the call. It's also clear that you've got financial and non-financial disclosures becoming increasingly linked and intertwined. So having a really good understanding of your climate-related risks, it doesn't just support compliance with environmental regulations. It also unlocks financing opportunities through green loans, investments and grants and so on. And thankfully, we're moving to a world where every business really needs to take accountability for its impact on the planet. So ensuring that you have really high trust, high quality carbon data and a carbon reduction plan in place is going to be incredibly important for your business. And the great thing is that James Cooper Preston is very, very well placed now to help you with these requirements. And I think perhaps this is a good point for me to hand back over to Fiona to talk about things from your side.
Excellent, thank you, Beau. So yes, I think reflecting some of the things that Beau's already said, but why are we offering this service? Sort of why now? We know that sustainability and carbon reporting are rapidly rising up the agenda for businesses of all sizes, and so clients of ours are facing these pressures from regulators, from investors, from lenders, and from customers to measure and reduce their carbon footprint. So we chose to partner with, rather than doing this ourselves, we chose to partner with Trace because their platform is robust, it's intuitive to use, it's designed for accuracy, and so it allows us to offer a credible and crucially auditable, that's really important for us, but carbon accounting solution that we can seamlessly integrate with what we're already doing for our clients. But I think really importantly as well, it's because Trace shares our own values. Those are sort of transparency and integrity, a genuine commitment to helping businesses make meaningful progress on sustainability, rather than just, we absolutely don't want to be in any sort of space where there could be a sort of a greenwashing type accusation. So what does this mean for us? Well, just on that same point, really, as a firm, we're committed to promoting sustainable and responsible business practices. We are currently going through the process with Trace, using their platform to measure our own carbon footprint, and also to look at our employee sentiment, employee engagement, which has already highlighted how important this is to our team members as well as to our leadership team to have sustainable, responsible, ethical business practices. So we're working through those results with Trace. We haven't actually finished the exercise yet, but very soon we'll be in a position to be sharing what our current position looks like, and also what our next actions are. And for our clients, it means that you get access to a streamlined, reliable way to measure your carbon footprint, but one that you can be confident, and this is really important to us, that you can be confident that the results are robust and they're auditable, that we can stand by any of the numbers that we are reporting to you. And also we'll help you then turn that data into practical actions. So whether that's for compliance, whether it's for risk management, whether it's to support a lending application, or whether it's just to support your wider sustainability strategy. And I think the sort of final point just on this is that you also can be confident that your data is handled securely and professionally. That's really, really important in any business environment these days. Obviously, we're highly regulated, and we have commitments to handle all of your data, whether it's financial data or non-financial data, the same high standards, and Trace indeed share those high standards as well. Data security is really, really important. And then just but why us? Why are we, as your accountant, your ideal carbon accounting provider? And we know there are other options available to you, options on the internet for other service providers. But as your accountants, we already know your operations. We understand your business. We understand what your data flows are. We understand what the reporting requirements are, which we think puts us in a really strong position to be helping clients with their carbon accounting. We're aiming to be your trusted advisors, and our existing skills include things like data accuracy, like ensuring compliance, like translating numbers into actionable insights rather than something that's just left on the shelf. And by integrating carbon accounting, it could become into your regular services. It becomes part of your regular financial and strategic reviews. It makes the process efficient. It makes it meaningful. There's no duplication of process, no duplication of effort, and no extra hassle. And then finally, question that obviously always comes up is pricing. For most businesses, this isn't going to be a lengthy process. The software platform is designed to streamline efficient data collection and data analysis, so making it something that shouldn't be a cost-prohibitive exercise, and one that obviously can lead to, as Beau mentioned earlier, can lead to future cost savings and efficiencies for your business. So, but as part of our scoping discussions with you, we will discuss the scale of the work and needed, and always agree, as we do, always agree a firm fee with you before we move forward into actually doing any of the work. So hopefully that sort of summarizes why your accountant is your ideal carbon accounting provider. But and I think that's all Beau and I had really to share with you. It's just whether there's any questions that have come up.
Can't see any in the Q&A at the moment. I think if we give a minute or so for anyone to ask any questions that they might have there. Just a reminder to everyone, that's at the bottom right box, the question mark box there. Just while if there are any questions coming in through that, a couple that often come up from organizations that we speak with. One is around the data involved. So there's really a couple of sources of data that usually go into the carbon impact, the carbon measurement of an organization. The primary one of those is spend data. So what you're spending money on as an organization, your expenses, that all has a carbon impact associated with that. It's one of the many reasons why accountants are really fantastically well placed to provide carbon accounting services, because they're so familiar with your accounts and your spend and your expenses, and are able to advise on that so effectively. So that's one source of data that makes things really, really convenient. The second piece would be the type of data that you might traditionally associate with emissions, so things like your electricity and water usage, and business travel and things like that. So those are the data elements that go into that. The other point there is on the data side of things. I think one bit I'll add here is that one of the reasons that we love partnering with accountancy firms like James Cooper Creston is that when it comes to financial data, of course, you expect that rigor and analysis that accountants provide, and that same rigor and analysis needs to be provided. It needs to be provided for carbon data as well. So it's doing these exercises manually or internally within organizations is often not the way to go about it. You might end up with data that you're not confident in, that might put you at risk potentially of things like greenwashing, or you're just there not confident in the outcome on any kind of tenders or things like that you're bidding for. But having your accountant go over that and run this exercise for you gives you that confidence that you've, as I said, that there's been that level of analysis that you'd expect on the financial side of things too.
Thank you, Beau. And we do have a question now, which is around whether the software platform is already available for us for clients, etc., to preview. And yes, so certainly, if you go onto Trace's website, you'll be able to see exactly what they do. in terms of we're fully set up with them already. So yes, we would be, Beau, correct me if I'm wrong on this point, but for you to see our sort of integration, we would need to then be connected to you. But certainly in terms of seeing what Trace do and what the platform looks like, then accessible through Trace's own website.
Yeah, correct. So I think it's fair to say you're well set up to be supporting clients with these services, and but if anyone wants a glimpse on like what the dashboards, for instance, might look like from our side, then you're of course welcome to visit our website. But yes, we've been working closely alongside the JCK team to make sure they're well set up and up and running in terms of delivering these services, utilizing our software platform, but crucially adding their expertise and their analysis and their data review on top of that to make sure that you can be really confident and you have high trust, high quality carbon data in place.
And then, Beau, there's one more question, which I think is probably for you, your better place to answer. It's around the electricity usage in common areas, which obviously will be fairly frequently where there's lifts, receptions, etc. So which comes through the management charge rather than being specific. And actually, we have this as well in some of our offices.
Yeah, great question. So when it comes down to those emissions, if you can't get a hold of, for instance, if you're in a shared co-working space, as many organizations are, and you can't get exact electricity emissions for that office, that's when we fall back on benchmarking data. And the most common one of those for electricity, for example, would be the size of the office space that you're taking up. So it would be the meters squared that you and your team utilize in an office space. And we've got the benchmarking data from the UK to show what that would typically mean in terms of electricity emissions, and we work off of that.
And you would use that for common areas as well, so for sort of a share of reception, etc. Again on a benchmarking basis.
Correct. So yeah, that's factored into the emissions factors used with those overall calculations on electricity. Yeah, by location.
Excellent.
But yeah, great question there.
Good. So I think we haven't got any more questions being asked. So whether there was anything else that you wanted to share?
No, I think that's all from my side. Thank you. I've just put we've got the screen here with your email on there in case there's any further queries to follow up with. But yeah, thank you, Fiona, for inviting us to speak to everyone today. It's been good to present to you all. And but any other questions, yeah, please do follow up with Fiona via email.
Yes, absolutely. And yes, sorry, there's just one more question. It says, are we able to get a copy of the slide deck, please? And yes, this is being recorded, so we'll send out the recording. And as Beau said, please do contact me. I'd love to talk to people about this. Years and years and years ago, I've got an environmental degree. This goes full circle for me, so absolutely love talking about it. So please do get in touch, and we'll go from there.
Great.
Excellent. Thank you all. Thank you for attending.
Thanks, everyone. Bye for now.
Bye.